Welcome back to the CIA, where we look at the data behind each project. We look at the good and the bad, and then you can decide if it's a project for you. Today, we're looking at Nodes.ai. It is in the AI space, GPU rental play, and it's got a low supply, it's deflationary token, and a low market cap. I think it's got lots of room to go. So, thank you everyone who jumped on the office hours. They were fantastic. Got a lot of good feedback. Might be looking at some material on exit strategies here, especially database exit strategies, because I have been successful exiting in the past. So it sounded like something that you guys might want to learn more about. But let's get into it. We even have one guy, won't say his name, but he offered to do some research and help out. So appreciate it. We'll go through the items here in this slideshow. Let me give you guys a little better view of the analysis I do here. So we'll start with the summary and products of the, this is a GPU rental play. It's got multiple GPUs for rent, and you can, do multiple different types of analysis and stuff on it on the network, but it's kind of like a public thing where you can rent a GPU for a certain amount of time, and people who have extra GPUs lying around can put those onto the network and get paid for GPUs that they aren't using. It's called a DePIN play, basically decentralized physical infrastructure. And there are a couple of them out there. ICP is a GPU type, or they use GPUs, but it's the same type of play. I think if you remember Helium, I think Helium's a very similar one as well, just a different product. And the difference with Node.ai or Nodes.ai is they're trying to target AI applications specifically, but they can also do things that Render does as well. So that kind of differentiates them from other people. They also claim to remove some of the technical setups for the GPU, so making it easier for more people to put their GPUs on the network. And they also offer staking, so people can stake and they can participate in the rewards of the network without putting GPUs on. And they kind of go into that breakdown on their website if you're interested in more. And let's go to markets and revenue. So I mentioned a lot of these. One other one they have is a business API product where you can pay to for their API endpoints. And these are all the rental markets that they're trying to capture. Render and some other platforms, some other projects do the same thing. AI training is really the unique one here, and that's how they're differentiating themselves. One of the ways they're reporting 500,000 a month in revenue, and but it doesn't match what their CPU data and rates say, right? If you multiply the total number of hours in a month by the number of, GPU, by the number of GPUs they have, by the rate per hour, it doesn't equal 500,000 a month. So either they're making more revenue off of some of the business side, or the GPU stats are incorrect. So I'll go more in depth. So more in depth to that in the Substack. Substack link is in the description. If you're interested, you can sign up, free emails. Substack is free. The tokenomics, very basic. They've got 100 million supplied. There's a 4% tax though on buy and sell. And then one other note here I want to put is I think 90% is circulating. And that's also important detail. There's no team allocations. The team is rewarded on real revenue, which I like a lot because that incentivizes them to get more GPUs on the network. And they need to do that because you'll see later they're getting beat. The team is doxed. Apparently there's a picture of them on Twitter. Couldn't find too much information about them. Sure, it's out there. I just could not. Telegram's pretty good. A lot of people coming in fudding. And I've watched a couple of Crypto John's videos, and I know he loves it when people FUD on a project. So partners, there are no known partners or financial backers, which is good. No one else to pay, right? So some of the catalysts Catalyst we got this project are they have strong AI narrative. They tout the real world asset narrative a little bit too. They've got some uh, NFT project that assigns NFT to GPU output. So I don't know how that exactly works, but they can play on that narrative. Should help them in this bull run. And I think their multiplier will increase because right now they're only on one exchange. They're only on or two exchanges, I believe, Uniswap and then a small centralized exchange, I believe. And so when they get that tier one listing, which they're working on, they should be getting it in May. They said they'll have a lot of extra buyers hit this project. So that is definitely a catalyst for them. Then they've also got a consumer GPU unit. The one, it's a physical product that is supposed to go on pre-sale soon. The one thing about this though is I hope they're not spending cash on this, on buying these things. I hope they're like partnering and or taking all the cash up front for these, just because any money they have really should be spent on marketing or incentivizing GPUs to join the network, especially like data centers or bigger people with more, multiple GPUs, try to grow their network quickly. They only have a 350 on their network right now. So, it doesn't take much to improve the amount of revenue they're bringing in just by, adding small numbers of GPUs. So if they can grow that, then I think that will help them a lot. That'll help the token price a ton. So some of the risks and downsides, they did have a large investor sell a big share, and you can see that on the chart. Actually, let's go over there right now and look at the chart and price action. So they just launched here March 22nd, so you can't really say a lot about price action. The good thing is it responded well to that last little bull kick we had in late March, early April. It is down. That's the big investor sale right there, looks like. And then it's been, on the downward trend ever since, but so it's consolidating is what I'd call that. Looks like a good, healthy consolidation to me. So no concern here. Just can't make too many calls on price action just because of the short time we got. And they do have a lot of competition. Uh, Blockchain projects and traditional. I mean, Microsoft has GPU rentals. I'm sure there are a bunch of others out there. And then we'll go over the next slide. We'll go over the blockchain ones. And they also have a buy and sell tax. So this wouldn't be a trade play for me. If I'm buying into this, it'd be a long-term hold, not super long, but medium long term. So I think a good play on this would be wait until they get listed on exchange and playing off those AI narratives. So comparable projects here, we've got Render. They're a pretty big one. They're at about a $3 billion market cap right now. These data on all these GPUs across these different platforms is really hard to get to. Like the transparency is terrible. It's like hard to get good, accurate numbers. So that's why I got this little asterisk here. This could be off. So Render's one. They don't really play in the AI space. They play more in the rendering of video. They actually don't play in the AI space at all, as far as I know. They play more like video rendering and graphics rendering for like video editors and stuff like that. So, there, if you were to, and this like little orange box is a calculated field that kind of calculates how many dollars that the market's assigning to them per GPU. So if we assume renders like got the market per GPU, that's like accurate across every other, we can apply that to every other project. Then the market's assigning them $280,000 basically per GPU on the network. Now, obviously, not all GPUs are created equal, and if you can do more with certain GPUs than other GPUs, then like maybe one's more valuable than the other. But I think those are little smaller details. So I think this is a good little estimate to make. The only question I'd have is like, hey, is that 10,000 like super accurate? Because Render doesn't publish that. That's just what they reported at one point. I think it's Nodes.ai. So be aware of that typo. At 283,000. per GPU and 350 GPUs on the network. That would give them 100 million market cap, which is like spot on. So I think that number is a good number to go off of if you're trying to do a little fundamental valuation. And then there's another project called IO.net. They're a massive company. I think they've been operating well before they plan to do a token. They're very similar to the way Node.ai is built, and also similar to Render. You can rent out GPUs. They claim to have 43,000 GPUs verified. They claim to have like something like 500,000, but since only 43,000 are verified, I think that's a good number, the best number to go off of at this point. They are planning on launching a token here in the first week of May, and as more information comes out, I might do a little review on them and just see, where they should be valued, and depending on where they open up and valuation, like it might be a good play. But you always got to be careful when tokens are just launched, because sometimes they're overvalued and they kind of decay. So it'll be an interesting one to watch, and something that we might be able to play. And then Filecoin is another one that's got they've got about 1,000 GPUs. Is another competitor. I didn't really bother to value them here though, because I think that's not exactly the same business model. So I did compare them here to Render, ICP, and Helium. I just think that relationship is very similar between like real world like application and their token. So it's not a rental. There is a lot of differences, but I think there's enough similarities that we can throw it on here. So if you see like these, like Render is going to be, Render could be around 60 billion by the end of the peak cycle, as long as they don't get any competition downgrade right from IO launching. And then ICP, I'm going to get a lot of slack on this, but I think it hit like 25 billion here. And then Helium is like, I think could get up to 43. I think that's aggressive for Helium, but they did really well last cycle. I don't think their narratives are great. So for this cycle, so I don't see them getting there. I see them kind of getting slashed on their valuation, but it gives you an idea of like how valuable these type of utility tokens can be. Now for the scores. So I think because Node has got a great narrative, they got multiple they can play off of. They're not listed on tier one exchange yet. Yeah, really low market cap. I think they have huge speculative potential. I think the team's got to do a couple more things. They got to keep marketing. They've got to show that they can compete with some of these other large networks by growing their network. I think they could do really well. Staying power, I'm not so confident on, just because I don't know a ton about the team. That's probably one of the biggest reasons the model gave them a lower score on staying power. Still not terrible. It's just, to me, a little bit of a risky play, which is fine. We're looking for big multipliers, and just know that going in. And reputation, same thing, like questions around the team. The community isn't quite as thorough as I would like, not as much information there as I would like. The transparency is just a little lower than I would prefer to see. But new project, those are the risks you see. So I really like this thing doing up to 3 billion market cap. I think it could do that easily, as long as it's get those tier one listings, at least one. And then peak bull, I think it could do 8 billion easy if that narrative really hits off and they're able to start to execute on growing that network. So it could even do more than that. But I think that's a good like bottom little assumption there. So there you have it for Node.ai. If you made it this far, I think you got some value out of this analysis. So give me a subscribe, and you get a notification the next time I do another review. Thanks for watching.